Sorry for the delay. Just had a little bit of a issue with Restream, just getting logged in and getting everything situated for the YouTube session. But happy Monday. Let's get things started for the poll report. Risk disclaimer: we understand risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose. Whether you trade stocks, options, futures, forex, cryptos, you know the risks. Social media: Mondays and Fridays for the YouTube channel, youtube.com/Chris Pulver, Instagram, Twitter. Those are my official ones that I'm most active on at Chris Pulver. We'll jump to the charts. Economic calendar right here. Pretty light way to kick off the week. This is the final trading week of April. So the 28th on Friday will be end of month. We have some expirations, not nearly as many as what we had last week to manage. I think we ended up having like 10 winners last week, but we had our fair share of losers too. We had some early assignments. We had to take some losses in stocks and options, but holding some good positions. Forex wise, was a great week. We had some automation profits rolling in. Equalizer Pros deployed for the first week live and did really well overall. Actually, when I did the live session on Friday, I think I showed 13. Well, I'll just check my document here. I've got the new Flex doc. I tracked it there. I ended up closing out for a win on the buy side. It was like negative 49 for the week. Ended up closing out for plus 302. And then my other side was pretty profitable. So last week on my full auto systems for Forex, Equalizer Pro came in. Like I said, it was 49. I think when we did the live session on Friday, and then I taught the class on it that afternoon at 2:30, and it had changed and updated. So a nice little win for the week with about 1,700 pips on Equalizer Pro, and that was just deployed Monday afternoon. So active system, pretty good strategy. I battle tested that thing all the way back to 2015, so it's dealt with a lot. It's proved that it can handle a lot. High volatility, low volatility, trends, no trends, flash crash. It just does its thing. So other systems did pretty well. It's just been steady, all year. So happy to get that in the mix. This week for the economic calendar, let me get logged into YouTube. Say good morning to everybody. Let's see here. Easy way to get the notifications. I know I started a few minutes late today, but if you're subscribed to the channel, have the notification bell on. When I do go live, it should pop up on your phone or your laptop or whatever that I'm going live. So, but I try to keep it as consistent as possible with opening bell Mondays, opening bell Fridays. Morning, Chris. Good morning, Ann. Morning, Robert. Darius. Good morning, Gail. Good morning, Denise. Good morning. FK Ruthan. Good morning. Nice to see everybody. Everybody, happy Monday. All right. Economic calendar. We have some CPI news coming out this week. I think it's in Australia. Aussie CPI comes out Tuesday, 9:30 p.m. Eastern Time. Thursday, advanced GDP unemployment claims again for the U.S., which there has been just a steady amount of unemployment claims. So softening labor market a little bit. Unemployment rate, which we find out during non-farm payroll, which will be should be next Friday. So we trade, like I said, the final week of trading for April through the 28th, and then May 5th we should have our non-farm payroll. We'll see what the job situation looks like. We're watching Treasury yields. I was looking at another big inversion on the 1 month and 3 month. So it looks like the markets, as far as the yield goes, the bond prices, the market is certainly looking at pricing in a potential default for the U.S., which again, we might see the U.S. raise the debt ceiling prior to June versus having it be dragged out from that window of like June to September. That's really the only, the high stakes game that I see getting played right now with what's another major catalyst. I think the Fed has been absorbed pretty well by the market. CPI data, PPI data, all the inflation metrics are being absorbed by the market. It's reactive by the Fed. The FOMC rate decision expectation for May hasn't changed. So CME Watch Group is still looking at a 25 basis points hike for May. It was 80-20, now it's 86. So it just keeps going up that it's pretty much baked in that the Fed's going to raise rates on May 3rd. So by the way, non-farm payroll on the 5th, but I totally forgot that May 3rd is also another Fed rate decision, which is expected to be 25 basis points. And I think that is signaling the pause at that point. But like I said, debt ceiling, bigger fish to fry. We'll see how that plays out through the month of May and June. What else for the calendar here? Bank of Japan monetary policy statement, outlook, rate decision expected to stay the same at negative 0.1%. Of all the majors, so Aussie, CAD, Swiss, Euro, Pound, New Zealand, Yen, Dollar, the Bank of Japan is the only one that's still at a negative interest rate. All the other ones have come off of those zero. I mean, the Swiss was negative, now it's 1.5. The ECB was 0, now it's 3.5. The pound is looking to raise rates again with that 10+% inflation print that happened last week. We have German CPI data. There's a press conference for the BOJ, so like 11 p.m. to 2 a.m. from Thursday, Friday. We'll see if there's some crazy volatility in the yen crosses. And then all day Friday, we've got Eurogroup meetings, CAD GDP, and PC price index for the U.S. So not a crazy week, but enough to keep us interested and maybe some volatility for end of month by the 28th. Okay. Morning, Matt. Giddy up. Morning, Gary. Okay, let's take a look at some charts. Last week, let's see here. Let's go to the SPY. Where are we at for now? Just kind of hanging out. 412, struggling to break the highs at 415. I put 410 resistance, but I'm going to change this to 415 on the chart. 415 right there. Boop. 415, and then we have our August highs. Yeah, I'm still just kind of directionally looking like, are we going to see a bigger move? Is this up to down, up to down, up to down? Is this what we're dealing with, or is this going to test this high? This is obviously a big make or break right here. I mean, even here, this is a big make or break. Can we break these highs and head up to the August highs of last year? Do we reject off this level and come crashing all the way back down for a big sideways range? I don't know, but we'll find out. Right now, this like slow drifty melt up continues to play out. Like I said, the 1 month, 3 month, those yields are falling sharply. So the 1 month is now down to 3.36, which means your short-term bonds are going up. Here's your 1 to 3 year bond. Nice cup and handle. Actually, this is more of a double bottom. We did some trades down here. SHY getting in nice and low. I think we did like the 82s, which is right where it is now. So it's in profit. What else? We have the TLT. That's the long-term one, the 20+ year. This is a cup and handle. However, if we go to, let me log into my Schwab account. I'm just going to take a quick glance at the fixed income and see if these rates have changed. I think we looked at this in Equities on Demand last week, and we noticed that the certificates of deposits to CDs are paying 5 to 5.1%. Treasury notes last week were paying 5 and 5.1, 5.15%. Again, you have to roll those. You got to be aggressive. It's short-term stuff, but it's where a lot of money is flowing right now. Money market flows have been pretty substantial. All right, let's go to trade. Go to bonds and fixed income. Here we go. Okay, so here's a quick snapshot versus looking at like Treasury Direct. CDs, 3 month, 6 month, 9 month, 1 year. So I've already parked some money in like a 5 and I think 5, a 4.96 and a 5.05. So these, I mean, the 18 month down a little bit. The 1 year is kind of the peak at this time. The 3 month Treasury at 5.12, the 6 month 5.04. So I mean, it still is beneficial playing the 1 month and just hoping you can roll it, or the 3 month rather. The 1 month isn't terrible, but I mean, what we saw here, if I go US 01M, it's down to 3.36. If you go to the 3 month, it's up to 5.06. So the 3 month is getting all the love at this time, and you're essentially rolling it once a quarter, right? So we are going to continue to monitor this. I think this is interesting to see how this plays out with the Fed raising rates in May, especially raising it by 25 basis points. If the treasuries are around that point, but are we pausing and cutting later this year? If so, I would expect this to be a waterfall on the yield, which means bond prices go up. Okay, so we'll see how long this pause drags out, or we'll see if the market starts pricing in the rates start to go down a little bit or dip, and then the bond prices start to go back up. So we will see. But obviously, if you hold a bond to maturity, then it's full profit on the discount, right? These all trade at discounts, and they come to their full face value by maturity. Problem is, a lot of the banks that were holding this stuff, this is what happened to Silicon Valley Bank. We talked about this in trading rooms. When you're holding, 10-year treasuries and they're worth 70 cents on the dollar, and you need a liquid injection, guess what? You're taking the loss on those bonds. So rather than holding them maturity and having it be a risk-free investment, because the bond prices went nuts the last couple of years post-COVID, then everything changed. So anyway, all that fun stuff, right? So the 3-month takes the cake. The 10-year is at 3.53. So the 1 year, U.S. 1 year. So we're at 3.53 for the 10-year. 1 year is at 4.76. The 2-year, which is typically the measurement for the inverted yield curve, is at 4.15. So it's tightening up a little bit as far as going back to a normal yield curve. Here's our 10-2 right here. Is it less than half of 1%? Just at that 0.6% still. Okay. And what does it mean? I don't know. I mean, this is, if you look back at, well, you can barely see the chart. I'm not subscribed to Y charts, but there was a point where I could go back to see like 1980. And all we've really had for the last 40 years is we would touch the zero or dip into that inverted level, and then it would rally and we'd have a recession, pretty much. But we have had the longest drawn out inverted yield curve that I've ever seen in trading the markets for over 20 years. So what does that mean? I honestly don't know. It means that it's just something we can't ignore. I think that it is basically the reality is we're in a recession. We're just not really calling it that, which is completely stupid, but certainly feels like one. Certainly looks like one. I mean, we want more unemployment. We want softer job numbers. We want a lot of stuff to like cool down the markets. I mean, the housing markets cooled down as in a recession. Supply is finally catching up. Prices are coming down a little bit. Inflation data has been much improved. The question is it going to be sticky from this 5% level or sub 5%? Big drop here. We've essentially operated with deflationary pressures in order to drop it from 9.1 to 5%. Month by month, does this continue to come down in big strides, or does it start to get like stickier in here, where from 5 to 4 is tougher than it was from 9 to 5? You know, and how does the market take that? I don't know. How does the Fed react to that? I don't know. So these are all things we're kind of operating on, week to week, month to month. Okay. All right. This week, let me take a look at some notes. I just want to see what I have lined up for the 28th. 428 expiration, I show 9. Coinbase, credit spreads, JetBlue credit spreads, Alcoa credit spreads, another Coinbase there, Tesla, that's good. Meta, Microsoft, I think both of those. Yes, yes. Intel covered call. If it's up to 31, I get it called away for a good chunk of profit. And there's Coinbase again repeating. So, okay. So not a heavy management week in stocks and options. Currency wise, let's go to the DXY, go to the daily. So we talked about this last week. I mean, the dollar with the pre-summer push, the dollar's been weaker. Like this has been the trend for the pre-summer push. It started here February, pushed down into March. It's kind of stalled with this equal low in April. Now I don't know if this means more or if this pulls back for an equal high. So I'm pretty torn on where the dollar is right now. I've been looking at this, telling traders, hey, if it breaks above this trend line, I'm going back up here to equal highs. If it continues to push down, then stay in the direction that it's been giving us for the last month or so. Okay, so we have some short dollar positions going right now. We're long euro dollar, long pound dollar, Aussie dollar. We got stopped out on. It was a tighter stop loss. We're long Kiwi dollar, and the only one that I'm hedged with is I'm long dollar Swiss for basically the Swiss basket, but that's still pushing at lows, possibly falling away. It's just going to take some time and probably some intervention by the Swiss National Bank, in all honesty. Euro Swiss, same thing. Can it hold these levels and it hold these lows at 97? Do we get back up to the highs at 1.01? Do we hit this big pivot and pocket up here at 1.03 and 1.05? I certainly hope so, because there's a lot of profit riding on that for me. Government spending needs to decrease. Yeah, well, raising a debt ceiling isn't doing that. I mean, I think raising a debt ceiling is let's avoid default, right? And then try to rein it in. But it's just a drug. I mean, the markets have needed it. It makes you question like what real capitalism looks like, because it's not a free market when there's heavy manipulation and intervention. And that's what's going to be interesting about the whole debt ceiling is it contentious, or is it just, okay, let's not make this a problem, let's raise it. I mean, the U.S. has never defaulted, but public debt spending is becoming a problem, especially at 5%. So it is a concern, and legitimately so. We've had a bazooka of stimulus the last, just 3 years. let alone the last 20 years. But the Fed has that power as one of the world's strongest central banks. Okay, so dollar direction. Oil, oil had a pretty rough go last week. Gap getting filled. Let's see if oil has some bounce back. So come back in, fill this gap. Is this low to high, high or low? If oil pushes higher, great. Yearly pivot still at 94. I was saying this all year that I think oil is going to be range bound. So 65 support, 95 resistance. It looks like pattern wise, if we're coming back to fill the gap and there's some demand in here, that we start to see oil push higher. So come back into these equal highs, yearly pivot that's around 90 to 95. So I'm still bullish on oil. I am curious if again, inflation gets sticky. That's going to help oil. That's going to help commodities. Maybe that's a good look for Q2 as we go into summer. Gold and silver, little resistance holding in. Gold going a little bit lower as the dollars held that equal low. Pullbacks are likely. I think pullbacks are needed, but heavy resistance up here at 2075. Do we have one more push on gold before we have a drop, or do we have to get repositioned? Is it coming all the way back down here, to equal lows? If so, I'd still buy gold. I'd still buy gold. I just want to have some upside potential. That's all. Silver I like better. I keep saying this, but I think silver technically still has better upside than gold. So that's why I'm long silver. Bitcoin, the 30K mark was holding, and it is. Now it's at 27.6. So 30K held pretty nicely. We pulled back to some pivots and pockets and inefficiencies. 30K, thought I had a resistance level there, but we can see it. So support, big cluster right here. We hit it again. If we break 30K, Bitcoin has a lot of upside. If we hold, 20 to 30K is possibly a range. Okay, so that's a good range. I mean, if you're buying at 20, taking profit at 30, buying at 20, taking a profit at 30, that's a good chunk. Every single time. How many opportunities do we have? I don't know. We'll find out. But 30K is a big milestone. If we can break above it, then I think there's good potential bullish. A lot of open space. That could be kind of the sneaky little storyline for the year is maybe Bitcoin outperforms a lot of things this year. Ethereum, same thing. I posted this last week in the newsletter. This past support right around 2170 held. Now we're pulling back. So can we pull back? Yeah, sure. We can pull back in this area. We can pull back in this area. We can pull back in this area. But the question is, do we pull back, have some higher lows, right? Higher lows, and then Ethereum makes another run. If the bullish structure remains intact, there's support between 18 and 1600 on Ethereum. Okay, that's oil, gold, silver. Any currencies? Just have a couple of minutes. Otherwise, not a lot of heavy news this week. I'll be watching the baskets. We'll see if the dollar's really a mover. The JPY could be an outlier this week with the BOJ monetary policy, even though nothing is expected to change. Stick with the short-term alignments on the yen crosses. I did look at some deployments last week on Swiss yen. So Swiss yen is up to 151. That's another big push on the day. So currency strength showing weakness. So Euro Swiss intact and kind of moving in tandem. The JPY a little bit softer. So Swiss yen is marching right back up to all-time highs. Let me see if we have a daily. It's so close. I mean, we're almost overbought. I'm looking for some divergence. This has just been straight up since 140 to 151. That's 1,200 pips. We're coming back into resistance. So there is a channel resistance here as well. I'm actively looking for some bearish confirmation. We talked about deploying a system like Masterflex to sell with confirmation. It's not just selling now. It has to wait for everything to align on a 1-hour time frame. Hasn't happened yet, but I think that's one trade I'm watching. Euro yen is similar, right? Euro yen's moving right back up to the same highs. It's not bearish yet, but if this level holds, this is a pretty good opportunity to sell with confirmation, stop above, and take this all the way back down. If it works, right? I mean, it's going to be a 5-to-1 or 6-to-1 reward to risk, give or take, which is a good trade in any regard. So even if it doesn't work out, I think it's still a good reward to risk opportunity. But confirmation is key, which is why a system is going to help. If there's no bearish confirmation, then there's no trade, and the system will trade it. Okay. All right. Any questions? If not, let's have a great week in the trading rooms. business as usual. End of the month on Friday for the 28th, end of the trading month. So we go into the weekend, Friday end of day. So Wall Street closes at 4, Forex closes at 5. This is Eastern time. And then it'll be the wrap up for April's monthly trading. We kick off May, which is next week. The 3rd is FOMC, and the 5th is non-farm payroll. I was invited to a session on the 3rd. I think I'm joining. It's Nick Syack. I've done some trading battles with him. I think I'm gonna tag team a session on the 3rd with him. So I'll give you the details when I have them. I need to actually check that today, but that should be on 3rd for FOMC. We'll start a session at like 1:30 p.m. But anyway, that's it. Let's have a good week in the trading rooms. I'll see you there, and happy trading, lots of profits. Thanks for being here. Bye.